Hey everybody, Chuck Barone. Wednesday, April the 26th, 2023. Another fascinating day on Wall Street today. Another day of crazy, guys. The beat goes on. Ba-doom, it's nutso. As always, before we get the show rolling though, I just want to welcome everybody. Thank you guys for watching the show and your participation, your likes and shares. Lots of questions. I was on yesterday responding to the comments and questions. It was great to be talking to you guys again. I'm planning on doing that from now on. So if you guys have something to say, good or bad or nice, hopefully, hit me up in comments. I'll be on there every day from now on. Markets today. Well, stock market ended up mixed. It's kind of a weird day on the markets, right? It looked like it was going to start to be a decent day. We had good earnings. Microsoft, Google, or Alphabet. And it looked like it was going to be okay, but then more news about Republic Bank and other companies, Home Depot and some other companies, not so great earnings. The markets end up mixed. The Dow down 228 points. Not a good day for the Dow, sitting at 33,301. The S&P drops 15 points to 4,055. And the NASDAQ, now this is the go-go's, the tech part of the markets, actually up today 55 points, 11,854. That's thanks to Microsoft and Google. We'll see how the rest of this week finishes up for NASDAQ. Bond prices, well, bonds selling off today, yields up a little bit, nothing dramatic, but this bond market has really just whipsawing all over the place, has no idea which direction to go, responding pretty much daily. So we saw yields up today, the 10-year sitting at 3.43%, up 4 basis points. 2-year, also up 4 basis points, 3.93%. So now this inversion we have is about 50 basis points, still not as bad as it once was. I remember it was around one, anyway, it was high, 110 or 115 basis point inversion, narrowing down what's still inverted. Bond market looking not real healthy right now. Be cautious if you've got bonds, and especially with bond funds. Dollar today down small, but still sitting right in the pocket, 101.49. It's been gyrating between 101 and 103. The dollar just kind of not really much news to move the dollar, so it's just going up and down a little bit each day, just kind of staying static. Metals today down, not a good day for metals either. You got gold down $9.30, $1,988.40 per ounce. You got silver down 14 cents, $24.84 per ounce. These are still pretty good numbers for metals, guys, for gold and silver. I think, as you guys know, I've been saying, I think this rally, gold and silver are going to go higher. They're just going to have to get through this resistance here. It looks like 25 and 2,000 is going to be the breakthrough numbers. I'm sure sooner or later something will happen with the dollar. You'll see a big spike, and these resistance numbers will be a distant memory. Oil today, tough day for oil, down $2.79 per barrel, $74.28 for a barrel of West Texas Intermediate. Like I was telling you guys, and I guess I've been hitting oil pretty good these days. It's been in this trough between $75 and $80. It breaks out once in a while. OPEC comes out with something, or some news makes oil rise. It just doesn't stay there very long. Comes back down. The trend in oil is down. If this recession becomes a reality in the United States, the trend will be more down. So be cautious if you're in oil. Be cautious with it. We'll let you know when the tide turns and it looks like it's time to rally for oil. Bitcoin down small today, down $462, 27,440. Bitcoin, it's still pretty decent. It's holding up pretty decent. I still think that it's consolidating. We haven't seen any gigantic dips. It did break 30,000 for a short time. I think that's the target Bitcoin has next, and after that 35. I think that there's now some institutional interest in cryptos. I think cryptos, I don't know, a lot of people believe it's like this, just the latest Wall Street hustle to separate poor people from their money, right? But I think this crypto might be here to stay, guys. I'm continuing to do my homework. I don't really have much to say about it yet because vast majority of the people watching this show know a heck of a lot more about it than I do. But I think that just going on a technical basis with prices and charting, Bitcoin consolidating here, I think it's getting set for another run up. News you guys need today? Well, not a lot of tremendous news in the market, but some stuff I thought you guys needed to hear about. Topping the list is bank troubles, man. Bank troubles not going away. Republic Bank in the news today. Listen to this, guys. They disclosed that depositors at the bank pulled more than $100 billion in money out of that bank just last month. $100 billion. That's a gigantic number, man. So I don't even know how many of the really big banks could absorb a hit like that in a month and survive it or not have some serious trouble. I think that, the big banks did step in to save Republic, depositing $30 billion in the bank to backstop their losses and help them stem the tide. I think that, Republic Bank and deep doo-doo guys, now they're talking about selling off assets, laying off more than 7,000 workers, struggling just to stay alive. Listen to this, guys. Over about a year ago, this time last year, Republic shares were selling for $170 a share. Now, we know that last year, the second half of the year was pretty tough, but in February of this year, Republic Bank stock was still over $150 a share. Today, you can have it for $6. That's the kind of trouble Republic Bank is in. You can rest assured it's not just them. All the regionals probably suffering the same way, just haven't had the big run yet. I'm guessing now, this is me talking to you guys, I'm guessing the result of this will be one of the bigs will come in, will end up scooping up Republic Bank and its assets. Of course, before they do that and make any kind of commitment, because banks are way smarter than the government, they'll get gigantic concessions from the Federal Reserve and the government. So they'll basically insulate them from any loss possible, and they got nothing but upside. In fact, it wouldn't be a big surprise to me to see several of these regionals, especially the 11 that Moody's just downgraded, get swallowed up by big banks before this, whatever they're calling it, this time in the banking world is up. The era, now too short for an era. But I think it wouldn't be a surprise to see the bigs start scooping up some of these regionals. This was interesting, guys. I was reading today, people earning over $200,000 a year. So we're talking the upper middle class here. People earning over $200K a year applying for unemployment benefits in record numbers. It's a gigantic shock to the system. I'm sure it's a gigantic shock to these people, especially New York and California getting killed. Imagine this, guys. If you're making $200K a year, and you're making north of $15,000 a month, $17K a month roughly, right? Imagine going from that kind of income to what does unemployment pay in your state? In Nevada, it's about $500 a week max. So imagine going from a $200,000 a year income to $25,000. What is going to happen to these people, man? I mean, I'm sure when you have that kind of income, typically you're going to have some money put away, but we know the savings rate in this country and the debt rate. I think we're going to see here a giant lifestyle change for the middle class, man. They're having their way. Even the wealthier middle class now struggling, stuck because they're stuck to a job, stuck to, these paychecks and the, their alleged way of life, right? They're screwed, man. They're just dead meat. I think that, imagine trying to take your income from $15,000 a month to $2,000. Just, I don't know how those people are going to make it. I think it's probably a great time to be a bankruptcy attorney coming up, right? And in connection with this, I was reading in Britain, their unemployment worse than ours, and their inflation still over 10%. One of the top British finance ministers warning the public and the business community that this cost of this inflation need to be borne by business and labor equally. What's happening is labor's trying to shift the cost to the public, or labor trying to shift the cost of extra costs they're incurring to live to the companies. The companies then passing that cost on to their customers, starting what we talked about many, many times on the show, this wage price spiral. So now that's the big problem in Great Britain. Might be a little bit of foreshadowing what's to come here, guys. Okay. Not good news for Great Britain. Their suffering is 10 times worse than ours. But we're catching up now. When you have people in the upper echelons of the middle class being forced to go and collect unemployment, not a good sign for the future of the economy. And finally, yesterday I was talking about this LEI index and how it had dropped pretty dramatically, way more than they thought. They were expecting it to hold steady at 104. It came down to 101. I wanted to understand a little bit more about that and what it meant for the market. Listen to this, guys. It's crazy. So the LEI is an index they've been using for about 65 years or so to measure and kind of get a gauge where the economy is and what they think the future might be. Let me put my peepers on for this. So now, this index encompasses a whole bunch of different segments of the economy, like the S&P 500, the spread between the 10-year and the 10-year Treasury and the Fed funds rate. It takes into consideration building permits, unemployment claims, the ISM index of new orders to get, an idea of manufacturing. So it really measures the broad economy, okay? Now listen to this. The LEI has now been down for more than 12 consecutive months as of last month in March. Now this is only the fourth time in the 63 years that they've been doing the LEI index. Every time it's hit 12 months in a row has been a recession. Every single time. This will be the fourth time. But listen to the years, the last 3 times this happened. Okay? First time it happened ever, 1973. Now, a lot of you guys are way too young to remember that year, but it was a very tough bear market for stocks. We had inflation in this country. We had this unemployment flying, oil shocks from the embargoes, uncertainty with Watergate, a president resigning, and a new, all kind of crazy stuff going on in 73. The second time, 1980. And we know what that was, the kind of recession that brought, high inflation, unemployment, new president, and a tough couple of years after that. The third time, 2007 into 2008. That one, most of us are old enough to remember that one. A really, really, really tough inflation, a really tough recession. And now, and the last time it hit 12 months in a row, Bear Stearns collapsed on that 12th month. Guys, this is a very serious warning, one the Fed is looking at. Actually, the article was going on to predict that the Fed would go ahead and do their, what they called a window dressing rate increase here coming up next week on the 3rd. That they would raise their quarter, and then that would be the end of it. And if this LEI is correct, they predict that rate cuts before any more rate increases. So it's going to be crazy. We got a lot to look forward to for the rest of this year. We got big data coming tomorrow. We know we're going to get unemployment. We know we're going to get a whole bunch of important stuff. We'll be here to give you guys all the news you need. We appreciate your support. We'll be back tomorrow to bring you everything you need to know to protect yourself and your families. Until then, my friends, take care.